call on Government Order today number 2.
Taxation, Residential Land Withholding Tax, GST on Online Services and Student Loans Bill, third reading.
The Honourable Michael Woodhouse.
I move that the Taxation, Residential Land Withholding Tax, GST on Online Services and Student Loans Bill be now read a third time. For the benefit of the members, I'll briefly recap the 3 main items contained in this bill. This bill proposes a new tax, Residential Land Withholding Tax, as a means for collecting tax under the Bright Line test on the sale of New Zealand residential land by offshore vendors. Members will recall that this new tax is the third component of the government's suite of changes to address tax compliance in the property market. The earlier introduced Bright Line test ensures that the gains on property bought and sold within 2 years are taxable. This new tax is aimed at offshore vendors because it can be difficult for Inland Revenue to collect tax from the proceeds of such sales from foreign owners with no or limited presence in New Zealand. The new residential land withholding tax will therefore be collected from the offshore seller at the point of sale by the conveyancing agent and becomes payable from 1 July 2016. There will be an exemption for disposals of inherited property as well as relief for property transfers as part of a relationship agreement. The residential land withholding tax supports the effectiveness of the Bright Line test and contributes to the integrity of the tax system. Mr. Speaker, I now turn to the GST measure in this bill. A strength of our GST rules is that the tax is applied equally and with very few exceptions. This helps ensure that the tax is fair, efficient and simple. However, GST is not currently collected on most cross-border services and intangibles, including internet downloads and online services. Therefore, this bill proposes that GST be applied to cross-border remote services and intangibles supplied by offshore suppliers, including e-books, music, videos and software purchased from offshore websites, to New Zealand resident consumers by requiring the offshore supplier to register and return GST on these supplies. This would come into force on 1 October 2016. New Zealand is not alone in seeking to address the issue, and the proposals are in alignment with the OECD guidelines and similar rules that apply in other countries, including the European Union. The proposals in this bill also align with Australia's proposed rules. The proposed amendments are sound measures that will address the non-taxation of cross-border purchases of intangibles, maintain the broad base of New Zealand's GST system, and also help level a playing field for domestic and offshore suppliers. The third item in this bill aims to help ensure that student loan borrowers living in Australia meet their loan obligations. Most student loan borrowers do the right thing and repay their student loans, but borrowers living overseas have a lower rate of compliance than those living in New Zealand. Not surprisingly, keeping in contact with borrowers is an important way to keep borrowers engaged with their loan obligations. This bill therefore contains a proposal to allow current contact information on student loan borrowers living in Australia to be shared between Inland Revenue and the Australian Tax Office. In bringing this bill to its third reading, I thank the policy officials and drafters who worked on the detail of the bill, the organisations and individuals who made submissions on the proposed legislation, and the Finance and Expenditure Committee for its consideration and recommendations. I commend it to the House.
The question is that the motion be agreed to. Stuart Nash.
Thank you very much.